The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XPX index is trading at $62,991, climbing toward that $63,000 threshold, up about 3.9% over the past 24 hours. The CoinDesk Ether price ETX index at 4136. ETH is also climbing over 2%, and the new DFX CoinDesk DeFi index is at $629, up about almost 2% over the past 24 hours. Joining us now to talk about the crypto markets is David Nag, portfolio manager at crypto asset manager Arca. Hello there, David. Great to see you. So just over the past 24 hours, we've been seeing Bitcoin trading between the $59,000 to $63,000 range. Short term, what's your outlook on Bitcoin and the crypto markets at large?
We've been noticing a real change in narrative over the last 6 months, whereas in the beginning of the summer, the focus was on China. And then it became a focus on what's happening within the overall asset class with raises like FTX's recent raise and then another recent FTX raise. So we've seen a change in narrative to focusing on one specific sovereign nation to a focus on what's happening in the asset class. And in that time, you've seen a lot of things happen specifically with Bitcoin. You've seen the ETFs over the last few weeks happen. You've seen, obviously, with comments from Gensler and others, and then obviously, the actual approvals of these ETFs, that it seems that some of the regulatory overhang is starting to become a little bit more clear. I think that's been the largest obstacle for institutional investors is the institutional overhang within regards to regulatory effect. And as we're starting to get a little bit more clear on that, I think you're starting to see, especially with the global macro environment that we're dealing with, and especially here in the United States, you have 10-year treasuries, obviously, over the last few days going higher. You have Secretary Yellen, obviously, talking about the issues regards to inflation and saying that she thinks it may abate towards Q1, Q2 of 2022. And so that obviously has been sparking market interest as we deal with our own issues here domestically. So I think all of this has continued on this narrative that's happened over the last year and a half that Bitcoin serves a purpose in one's portfolio as a potential store of wealth and an asset that is uncorrelated or, as I always like to say, untethered, if you will, to what's happened here in the global macro environment.
So, David, you guys are putting your money where your mouth is recently with the $30 million fund that you just launched, although albeit it's relatively small amount for your portfolio. But nonetheless, what does it say about what are your investments in it? And what does that say about your overall outlook? How are you applying what you invest in with this fund to your overall outlook in crypto?
Over the last 3 years, we have learned a lot in this asset class with our flagship fund, our digital asset fund. We've spent early days in decentralized finance and DeFi. We've also spent early days in what's happened with play-to-earn gaming. We were one of Axie Infinity's first investors last year, and we've had a front row seat to what's happened with this notion of play-to-earn games. This, I think, is going to be a very important aspect of Endeavor going forward, as we've learned and we've been able to observe over the last year and a half or so of this new narrative that's come through. It's my opinion that the next 100 million users of digital assets are going to come through blockchain-based gaming. And we've seen that as evidenced with Axie Infinity's daily active user growth over the last 5.5 months. In April of this year, they were at 38,000 daily active users, and now they're over 2 million daily active users. And that has been further accelerant by Yield Guild Games with YGG, providing scholarships to those that may not have the economic means to purchase the 3 NFTs to play the game. And so this is becoming a very big part of the focus of Endeavor is NFTs and gaming, as we've already seen this kind of early maturation of what's happened here. And we're starting to see more games that have similar dynamics to this, play to earn, having the ability with YGG providing scholarships for those same players. And we're starting to see pockets of interest in certain parts of the world. One of them is Brazil, where you have 200 million people living there and 95 million of them are gamers. That's 47% penetration. So again, like what we saw with the Philippines, where Axie and YGG played a significant role, we think that this is going to be another pocket where we're going to see geographic locations that have been dealing with hardships, especially with unemployment and COVID, where gaming, especially the ability to earn a in-game asset and then have the on-ramps and off-ramps to be able to actually pay for food and pay for rent and pay for clothing. These are things that are actual use cases. These are not just speculative assets where you're thinking that the price is going to go higher. And so this is what we kind of call grind economy, where you actually can play a game and earn a living, for instance. So with Endeavor, this is going to be a very significant part of that in terms of NFTs and gaming. The second layers and the third layers are going to be DeFi. Some people call DeFi 2.0 this new idea of abracadabra money. I actually have been calling DeFi 2.0 structured products and credit. I believe that DeFi, when it first came out, when the experiments had started to unravel, you have this ability to actually, we talked about with Nigeria, you talked about some of the effects with the ENAC, you have this ability with DeFi to actually help 1 billion people throughout the world who don't have a credit score, who don't have an identity. And with the combination of DeFi, being able to look at their usage of crypto assets, whether lending or staking, and be able to port some real world data, you can actually, there are some startups that are actually now able to create credit scores for people who don't have them. And then you layer on this idea of decentralized identity, or DIDs. You now have the ability to then further help, this 1 billion population or more into capital markets, into more of the upper echelons of the ability to get loans and be able to get mortgages. So that's going to be the second. And the third is going to be Web3, where we still see continuance. We've seen some effects of Web2 falling apart over the last few weeks. And we see that Web3 still have a major predominance here with interoperability, with the ability to have a multi-chain world where all of these different layer ones can operate together and create uniform platforms that people actually love and enjoy.